Welcome back, everyone, to the deep dive.
It's great to be back.
As always, we're going to be diving into some of the most interesting things that are happening in the market, and today's no different. We have a really cool set of information that you've passed along to me, and we're going to unpack that together and see what's really going on.
Absolutely. And what's really key here is that we've got a snapshot in time, as of April 1st, 2025. So it's very much real-time information.
Right. And just to kind of set the stage for our listeners, what we're going to be looking at is some information across 5 different companies. And the information includes like their recent performance, some of the key things that have been happening for them, and then, also some of the predictions about, what might be happening in the future.
Absolutely. And we've got quite a mix here. We're seeing, biotech, we're seeing pharmaceuticals, we're seeing a microcap, a newly public media outlet. We've got medical devices.
Wow.
So quite a cross-section of the market, which is always going to be interesting to unpack.
Yeah, definitely. So let's jump right in. And why don't we start by kind of naming these companies so that our listeners know who we're talking about.
Sure.
So first up, we have Aiff. That's the ticker symbol. The company's Firefly Neuroscience.
Okay.
Then we're going to be looking at Cort. That's the ticker symbol for Corcept Therapeutics. We also have Icct, the ticker symbol for iCor Connect.
All right.
And then we have Nmax, which is the ticker symbol for Newsmax.
Okay.
And last but not least, we have Rsls, which is the ticker symbol for Reshape Life Sciences.
Wow. So, a really interesting mix there. And I think as we go through each one, what's going to be really fascinating is to see, what are those different drivers? Because every stock has a story.
Right.
And what's causing it to move, up, down, or sideways? And, what are those signals telling us? And how can we interpret them?
Absolutely. So why don't we jump right in and start with Aiff, Firefly Neuroscience. Now, as of April 1st, the stock price is $3.79. And one thing that just kind of jumped out at me when I was looking at the information is that just a few days before, on March 28th, the stock price was actually $4.11.
Oh, wow.
So that's like a decrease of almost 8%. And the downward trend kind of continued through April 1st, where it went down another like 3.5%.
Okay.
But if we pull back and we look at it over the last 10 days, it's actually down almost 18%. So there's definitely some downward momentum here.
Okay. So some short-term negative pressure there. But I guess the question is that a trend, or is it just, a blip?
Right.
So what I find really fascinating, though, with this one is that despite that recent dip, the data is actually suggesting that there's a predicted rise of over 10% over the next 3 months. Now, what's really interesting is the probability range.
Yeah.
It's quite wide. So it goes from a lower end of 366 all the way up to 1803.
Wow, that's quite a range.
It is.
Yeah.
And that shows a lot of uncertainty. But, it is nonetheless suggesting a potentially much more positive medium-term outlook.
Yeah, that's interesting.
Despite what we're seeing in the short term.
And I think it's really key to understand that even though we have these predictions, we can't just take them at face value.
Absolutely not.
We have to look at the data. We have to understand why those predictions are being made. And, in this particular case, it looks like even though there's this potential for a rise in the next 3 months, the short-term indicators are actually pointing towards a sell.
A sell recommendation.
Yeah, which is a little bit counterintuitive when you think about it, right?
Yeah, it is interesting because on the one hand, you've got this potentially positive medium-term outlook, but then on the other hand, the short term is saying sell.
Yeah.
And that often happens in the market because you've got different analytical horizons and different methodologies that can lead to seemingly contradictory signals. So it's really important, I think, for anyone looking at this to recognize that divergence, that, the immediate signals are suggesting caution, but the medium-term outlook is, suggesting that there might be a little bit of hope there.
Yeah, and this really speaks to what we always say about the market is that nothing is certain and you have to be really careful and, do your research.
Absolutely.
Yeah.
And particularly in a sector like biotech, where things can change very quickly.
Right.
Sentiment can change very quickly.
Yeah.
News flow can change very quickly. And I think the key takeaway here is that, those short-term indicators are suggesting caution, but that doesn't necessarily mean that the longer-term outlook is completely off the table.
Right. And, when I was looking at this data, I was trying to figure out, okay, well, what has actually been happening with this company?
Yeah.
And it looks like the last big piece of news actually came out on March 19th.
Okay.
And that was for their fourth quarter 2024 earnings call. And so I was like, okay, well, that's pretty recent. That's just, a couple of weeks ago. So what came out of that? And it looks like the key takeaway was that they got an infusion of about $8.8 million.
Oh, wow.
From what are called warrant exercises.
Okay.
And so that's when, holders of these warrants, they have the option to buy shares, and they did. And so that kind of infused the company with some cash.
Right.
And what the company has said is that this essentially gives them a runway until the middle of 2026.
Okay, so they've got a bit of breathing room.
Yeah, they've got some time to actually, execute on their plan.
Right.
But, another thing that came out of that earnings call was that they were talking about the progress that they're making on their NVIDIA Connect program, and then also their BNA platform, which is a big part of what they do. But it doesn't seem like there's been anything really new since that March 28th date when the stock price started to go down.
So that could be part of what's driving that downward pressure. The fact that there hasn't been a lot of, fresh news.
Right.
Because, particularly in a sector like biotech, the market really thrives on news flow.
Right.
Positive data, partnerships, regulatory development. So if there's a bit of a vacuum there, that can sometimes weigh on the stock price.
Right. So maybe they're just in a little bit of a holding pattern right now.
Yeah, perhaps. And it's possible that, the market is waiting for that next significant announcement, whether it's, some positive data readout from one of their trials related to the BNA platform, maybe a major partnership agreement.
Yeah.
Or even some sort of progress on the regulatory front.
Right, because all of those things could kind of inject some life back into it.
Exactly. It's all about catalysts.
Yeah.
What's going to drive that next move. And I think, without that fresh information to kind of, generate excitement, validate that longer-term optimism, sometimes a stock can, stagnate or become a little bit more vulnerable to just broader market trends.
So putting it all together for AIFF,
yeah,
it seems like there's this underlying optimism that is reflected in, those 3-month predictions. But the short-term trends are kind of raising a little bit of a red flag.
Yeah.
And the absence of news, it could be contributing to, that hesitancy that the market seems to be displaying.
Absolutely. And, the key question really is what kind of event would be the catalyst to kind of reignite that positive momentum.
Yeah.
And bridge that gap between, the short-term concerns and the longer-term hopes.
Right. And, what kind of news could come out? Would it be, some positive trial results or?
Yeah, exactly. Or would it be some strategic collaboration with a, major player in the industry?
Right.
Or would it be, some kind of breakthrough on their technology? Or, any of those things could potentially be the catalyst. But until then.
Yeah, we just kind of have to wait and see.
Exactly. Watch and wait and see what unfolds.
Okay, so why don't we shift gears a little bit and move on to Cort, Corcept Therapeutics.
Okay.
And this one has a little bit more of a dramatic story, I would say.
Okay.
So the stock price actually surged to $114.22.
Wow.
And the driver of that was that they announced some really positive phase 3 trial results for their ovarian cancer treatment.
Oh, wow.
And this was announced on March 31st.
Okay.
And, that's the kind of news that can really send a stock soaring.
Absolutely. Phase 3 results, those are the big ones.
Yeah.
They're the ones that really matter because they're the ones that are closest to potential approval. So, that kind of news can definitely have a huge impact on the stock price.
So what did these results actually show?
So it looks like the trial demonstrated that their drug, relacorilant,
okay,
when it's used in combination with chemotherapy, it actually delayed the progression of ovarian cancer by 30%.
Wow, that's significant.
It is, and particularly for patients with what's called platinum-resistant disease.
Okay.
So these are patients whose cancer has stopped responding to earlier platinum-based chemotherapy. So, it's a really tough group of patients to treat.
Yeah.
And the fact that they were able to show a benefit in that population is, really promising.
So what kind of impact did this have on these patients?
So for those patients, the treatment actually extended what's called progression-free survival
Okay.
to an average of 6.5 months.
So what does that mean exactly?
So that means that on average, those patients lived for 6.5 months without their cancer getting worse.
Oh, wow.
Which, for patients with platinum-resistant ovarian cancer is a really meaningful clinical
Yeah.
benefit.
Yeah, absolutely. So, we saw that the market reacted really positively to this news.
Yeah.
But then just a day later, on April 1st, we actually saw a pretty big drop
Yeah.
of almost 20%, which brought the price down to 91.93.
So a bit of a pullback there.
Yeah. It's a pretty sharp reversal.
It is, and it's actually not uncommon to see that kind of price action after a big jump.
Oh, okay.
Often what happens is that some investors who bought the stock earlier, they decide to take their profits off the table.
Right.
And that creates, downward pressure in the short term.
So even though it looks like, a bad thing, it might just be, part of the natural ebb and flow of the market.
Exactly. And, it's really important to keep in mind that even after that drop, the stock is still up over 60% from 2 weeks ago.
That's true.
So, that positive trial data has definitely had a lasting impact.
And it seems like that impact is going to continue because the outlook for Cort is actually pretty positive.
Yeah, it is. And, there's a lot of excitement, I think, around, the potential for this drug. And the fact that it could potentially, address this really, unmet need.
Yeah, and it is currently considered a buy candidate. And the prediction is for it to go up by almost 9% over the next 3 months.
Wow.
And even the predicted opening price for April 2nd is higher than where it closed on April 1st.
So it sounds like the market is anticipating a rebound.
Yeah, it definitely seems like there's some optimism there.
Yeah, and I think that optimism is driven by, what I mentioned earlier, which is the potential long-term impact of those really encouraging trial results.
Right, because, if relacorilant actually gets, filed with the FDA and the European Medicines Agency, which it looks like it probably will because the data is so good.
Yeah.
That would open up a huge market.
Absolutely. And, the fact that they've shown a benefit in this really hard-to-treat patient population,
Yeah.
It suggests that there's a real need for this drug.
Yeah, absolutely.
And, the market recognizes that.
So the bigger picture here really seems to be one of potential long-term recovery and growth for this company.
Yeah, I think that's a fair assessment.
And, it makes you think about how long does it actually take for a drug like this to get approved? And how long does it take for it to actually get adopted and used and, for the company to really see the financial benefits of all of this?
Yeah, you're absolutely right. Drug development is a long and complicated process.
Yeah.
So even though we have these positive results from the phase 3 trial, there's still a lot of work to be done.
Right.
The regulatory review process can be lengthy. And then even once a drug is approved, it takes time for it to be adopted into clinical practice.
Right.
So it's important to keep that in mind, when you're looking at the long-term prospects for a company like Corcept.
Okay, so let's move on to our third company, which is Icct, iCoreConnect.
Right.
Now, this is an interesting one.
Okay.
So the stock price went up by 110%.
Wow.
On April 1st alone. It went from $2.37 up to $4.72.
That's huge.
It is. That's a massive jump.
Yeah.
And if we zoom out and we look at it over the last 2 weeks, it's actually up by almost 800%.
Oh, my goodness.
That kind of movement, it really demands attention.
It does. And, the first thing that jumps out at me when we see that kind of move is where's it trading?
Right.
So this one's trading on the P-Inc market,
Right.
which is an over-the-counter marketplace, and it has, less stringent listing requirements than the major exchanges,
Right.
like the New York Stock Exchange or the NASDAQ.
Right.
And what that means is that
Yeah.
the stocks that trade on the P-Inc market tend to be much more volatile.
Oh, okay.
So, big price swings like this are actually more common in this segment of the market.
And, to add to that picture of volatility,
Yeah.
when you look at the 52-week range for Icct,
Yeah.
it's gone from as low as 11.7 cents all the way up to $5.36.
Wow.
So that alone is like a huge red flag that this is a really risky stock.
Yeah, absolutely. And, when we see that kind of volatility, it's really important to kind of understand what's driving it.
Yeah.
And, in this case, it's not entirely clear.
Right.
There was a filing back in February that indicated that the company was intending to sell more shares.
Right.
And there was also a reverse stock split that happened back in December.
Mm-hmm.
And while they did report, some revenue growth in the third quarter of 2024,
Right.
it doesn't seem like that fully explains this recent massive price increase.
No. I mean, almost 800% in 2 weeks.
Yeah, it's really hard to justify that
Yeah.
based on, the fundamentals of the company.
And, this is something that we always tell our listeners, that don't get caught up in the hype.
Right.
Sometimes a huge game that doesn't seem to be tied to any real news should actually be a warning sign.
A huge red flag.
Yeah.
Because it suggests there's something else going on.
Yeah.
It could be speculation. It could be manipulation. There could be a number of factors at play, but it's just a sign that you need to be extra cautious.
Yeah, absolutely. All right, so why don't we move on to our fourth company,
Okay.
which is Nmax, Newsmax.
All right.
And this is a really interesting one because they just went public.
Oh, wow.
So their IPO took place on March 31st, 2025.
Okay.
And it opened for trading at $14 a share. And then it closed on that very first day at $83.51.
Wow.
So that is a massive first day jump.
It is. And, IPOs can be really exciting.
Yeah.
There's often a lot of hype surrounding them.
Right.
And, in this case with Newsmax, it's a well-known brand. They've got a strong following.
Right.
And so it's not surprising that there's a lot of interest in the IPO.
And I think it also speaks to, the broader trend that we're seeing with media companies right now where, there's this increasing appetite for, very niche types of content.
Absolutely. People are really looking for, content that aligns with their values, their beliefs, their interests.
Right.
And, Newsmax has definitely carved out a niche for itself in that space.
And it doesn't look like that momentum is slowing down because as of April 1st, the stock price was actually up to $138.98.
So it's still climbing.
Yeah. So it's more than doubled since it closed on March 31st.
Wow. That's incredible.
Yeah. It really speaks to, the level of enthusiasm that's out there.
It does. And, it's also important to note that because this is a newly public company, there's not a lot of analyst coverage yet.
Right.
So it's really hard to say with any certainty what the future holds.
Yeah, but what we can say is that, there's strong momentum.
Yeah.
And the expectation is for continued volatility.
Absolutely.
Yeah.
And that volatility is typical for newly public companies.
Yeah.
The market is trying to figure out what the fair value is. And, there's a lot of price discovery that goes on in those early days.
Right. And it seems like in this particular case, the market sentiment and the enthusiasm for this type of media is really driving the price.
Absolutely. And, that's something that's really important for investors to understand is that, the story, the narrative around a company can be just as important as the fundamentals in the early days.
And we're definitely seeing that play out with Newsmax.
Absolutely.
So let's move on to our final company for today.
Okay.
Rsls, Reshape Life Sciences.
All right.
Now, this is another one that had a really big jump on April 1st.
Oh, what?
It went up 341%.
Oh, my goodness.
It went from 39 cents all the way up to $1.59.
That's incredible.
And over the last 2 weeks, it's up 148%.
So a huge move there.
Yeah, a huge move.
And, I'm curious to kind of understand, what's driving that.
Yeah, and it looks like, one of the things that's driving it is that they got a really important patent allowance back on March 10th.
Okay.
And this is for their diabetes and neuromodulation technology.
And this is a big deal because diabetes is a huge market.
Right.
And, any new technology that can help to address that, it's going to generate a lot of interest.
And, that patent protection goes all the way to 2039.
Wow. So they've got a long runway there.
Yeah. So that could be a big part of why investors are excited about this company.
Yeah, it's definitely something to be excited about.
Yeah.
And I think, when we see this kind of move in the stock price, it's really important to kind of, zoom out and look at the bigger picture.
Right.
And say, okay, is this just a short-term pump?
Right.
Or is there something more fundamental going on here?
Right. And, in this case, it looks like there could be both.
Yeah.
You've got the short-term speculation, but you've also got this really important patent that could be, driving long-term value.
And that's what makes it so interesting.
Yeah.
Because, you've got those two forces kind of, pulling in different directions.
Right.
And it's really up to investors to kind of, do their own research and decide, which force they think is going to win out.
And we actually have a really helpful summary table.
Oh, okay.
That has a lot of the information that we've been talking about today, laid out in a really easy to read format.
And this is great because, it allows us to kind of compare the different companies side by side.
Yeah.
And see, where the opportunities are.
So if we take a look at that table, we see that, AIFF had a recent price drop, but it's predicted to rise over the next 3 months.
Okay.
But it is flagged as a short-term sell.
Right.
Conquer experienced that surge after the positive news, then a pullback, but the expectation is that it's going to continue to go up. Icct had that massive gain, but it's significantly overbought.
Right.
So there's a high risk of a correction.
Yeah, and that's something that investors need to be really aware of.
Yeah.
Just because a stock has gone up a lot
doesn't mean it's going to keep going up.
Exactly.
And then Nmax is riding the wave of its recent IPO.
Right.
But it's highly volatile,
Yeah.
so, it could go up, it could go down.
Absolutely.
And then finally, Rsls is also overbought
after
a huge jump, but there's that anticipated pullback, even though there is some good news for the company.
So really a mixed bag there.
Yeah.
Different companies, different drivers.
Yeah, and I think it really speaks to, the complexity of the market.
Absolutely.
And the importance of, doing your research and understanding the different factors that are at play.
And, it's also a good reminder that, there's no one-size-fits-all approach to investing.
Right.
What might be a good investment for one person might not be a good investment for another person.
So it's been a great discussion today.
It has.
We covered a lot of really interesting companies, and, we saw how the market can react to news, both positive and negative.
Absolutely.
And we also saw how, sometimes the market can move just based on speculation and hype.
And, I think it's really important for listeners to kind of, take all of this information in.
Yeah.
And really think about, what it means for their own investment decisions.
Absolutely. And I think a really good question for, our listeners to ask themselves is, given all of this information that we've talked about today, what single piece of information do they think would be most crucial for them to actually make a good decision?
A good informed decision.
Yeah, because, we've talked about a lot of different things.
Yeah, we have.
And it can be overwhelming.
It can be.
But if you can just focus on that one key piece of information, it can really help to clarify things. So I think that's a good place to leave it for today.
Yeah, I think so too.
Thanks for being here.
Thanks for having me.
And we'll see you next time on The Deep Dive.
Sounds great.
Healthcare companies often move differently than the broader market. Shorting health companies specifically might not provide a sound hedge against overall market movements, since they tend to have their own dynamics and influences. So, using healthcare companies as a hedge might not yield as effective protection as expected. Shorting healthcare companies can be a risky endeavor. Here's why. 1. Regulatory environment. Healthcare companies often operate under stringent regulations with varying government policies. Regulatory changes can either boost or damage stock prices. If a new regulatory framework is favorable, it can significantly affect the share performance of these companies. 2. Market sentiment. Healthcare companies are often subject to unpredictable market sentiments and investor psychology. A rise in healthcare costs or a public health scare could lead to increased demand, which is favorable for these companies' stock prices. When the Fear and Greed Index indicates extreme fear, it suggests that there's widespread pessimism and anxiety in the financial markets. This could be due to various factors like economic downturns, geopolitical tensions, or unexpected events that have caused investors to become increasingly cautious. During periods of extreme fear, market participants may withdraw their investments, leading to decreased market liquidity and potentially causing asset prices to fall significantly. Enjoyed this content? Please like, subscribe, follow for more updates, and don't forget to sign up for the exclusive bonuses down below.
Listen up, traders, it's your lucky day. Quick gains insights is here to stay. Subscribe now, come join the fray. Financial wisdom will light your way. Join Quick Gains Insights today. Like this video, pave the way. Sign up in the description, without delay. 4,000 free insights today. Like this video, pave the way. slay.